Robert, the market today, are you excited about it when markets are low like this, or does this create fear for you?
For me, it's a big opportunity. A big opportunity because you just need to you need to take away your emotions. And when the markets are down sharply, usually these are the best possible opportunities for long-term investors.
But one of the keys is to know when you're actually hitting the bottom. You know, some people would. You don't need to.
Yeah, you didn't, because you can just gradually go into the market, you know, when the markets are already down sharply. So, for example, the disruptive technologies market is down like 70 to 80% right now. And now it's a good time to start dollar cost averaging into these markets, you know. But if you were investing in this kind of market 1 or 2 years ago, your portfolio is now minus 80%. You know?
Right. And when we say
you need to take a look at the emotions of the market, and also, you know, you need to know what the central banks are doing.
That's important, because the central banks, as they're starting to raise interest rates, which is happening across everywhere. I mean, Europe now is going through this. So are you using the US market as the lead indicator where things are going, or is there other indicators you're paying attention to?
Well, the US market is basically the biggest market. So I personally, and also everybody who follows me, we are investing most of our money in the US market, of course. But I would not say that it's a leading indicator, because if you take a look at the China market right now, the Chinese stock market has been falling, has started to fall 1 year before the US market. So it's I wouldn't call it a leading indicator.
No. So you're looking at all of them combined to decide where things are at. What kind of tools are you using? Are you using your own internal research, or is there things that are out there that are open source that people could use to kind of figure out where markets are going?
Well, I use two big tools in the investing world. The first is the macro, a macro picture of the world. And then the second tool is the technical analysis. If you combine macro analysis and technical analysis, you can be much more successful than just following the macro or just following technical analysis. So it's a combination of both these areas, and then you can get a winning combination.
So why would some guy in Slovenia know the markets better than a lot of the financial planners that are sitting in, behind giant computer systems with all this data in the States? Why are you doing better than many of them?
Everything in investing revolves around probabilities. So there are no certainties. And in the last 10 years, my history of my major calls was really very profitable, but this doesn't mean that it will be also in the next 10 years. But because I'm combining, these two areas, macro and technical analysis, and I'm of course also in the circles that are in the how. By combining all this, in the past, I was very successful. And that is why I also believe that I will be successful also in the future. And I'm also humble enough that I know that I can be wrong. And when I give a wrong signal, when I think something that something will go up, and then if I see that I'm wrong, I will cut my losses. I will say, okay, this doesn't work. Let's just sell with a small loss and let's move on. Let's do something different.